Hello and welcome to ATFX's US data preview. Well, it's refreshing that we get to say that at the moment. For just a few weeks ago, we were in a dearth of any US data. But we've got an interesting week ahead. It is the first week of the trading month, but alas, no non-farm payrolls because we're still in that catch-up from the US government shutdown. So first of all, as always, please do subscribe to our channel. We'll keep you up to date with everything that's going on in financial markets. Currently at the moment, estimates for a US 25 basis point rate cut from the Fed stand at around 87%. Now, that's not particularly unusual, but if you just went back about a week and a half, 2 weeks ago, it was down nearly at 30%. So we have seen massive volatility in Fed rate cut expectations. And to be honest, we haven't really had much in the way of data to back it up. But this week, we've got some really key data updates. We've got ISM manufacturing and services number. We've got a couple of job numbers, not those non-farms. And on Friday, we've got that key inflation data, the Fed's favoured indicator. So plenty to go through. What we're going to do today is we're going to have a quick look at the data coming up this week, see if we can see it changing those Fed rate cut expectations, and then have a look at a few key charts where products could be seeing some big moves. And to be honest, we're still in the first session of the week and we've seen some decent moves already. So expect more volatility in the days, sessions and weeks to come. We are in December, and as we know, a lot of people like to see quiet markets, but it can get a little bit nasty and it can get a little bit naughty. So I'll just run through what we've got coming up this week. As I said, some key numbers coming up. We're going to focus on the jobs ones that are coming through and that key inflation number. First up, first couple of days of this week, we're not seeing too much to move US markets. We do have ISM manufacturing PMI data and ISM services PMI data. That should move markets, but probably won't have as much of an effect, especially on Fed thinking, as the job numbers. Now, what we do have is we have ADP non-farms, now traditional front runner to the non-farm payrolls, and they have been kind of in line. They've been a little bit weaker than we've expected, and expected to come out weaker again this time, just an increase of 19,000 jobs. So keep an eye on that. That comes out Wednesday in the New York session, anywhere 20 to 30,000 different in that. Expect to see the dollar move, expect to see it move hard, and expect to see some movements in those Fed rate cut expectations. So lower data in any of the jobs, and we've got weekly unemployment claims as well. Expect those rate cut expectations to go even higher, pass through that 90% and nearly lock us in 10 days' time. Conversely, and I think this is where the risk is, of course, especially since we've seen so much volatility in that rate cut expectation, if we get higher numbers, for ADP, if we get higher numbers lower numbers for weekly claims, and probably more importantly, that PCE core price index, if that comes out higher than expected, expect rate cut expectations to, I'm saying expectations a lot here, right, to drop down. And I think we could be closer to 50 or 60% by the time that Fed meeting comes about. So ADP expected to show a change of plus 19,000 jobs over the last month. Unemployment claims, fairly consistent, really, expecting to come in around about the 220 mark. But the big data, I think, that comes on Friday that could really see that dial move, yes, the jobs one will, but really want those non-farms, is that core PCE price index. Now, expectation is for it to have increased 0.2% month over month. That's fairly standard. We were sitting around 0.3. It's kind of dropped to 0.2 over the last couple of months. Not huge changes for me. And as I said, we haven't really seen massive changes in data over the last few weeks since we returned to it. What we have is a little bit of indications from some key Fed members, including New York's Williams, who has come out a little bit more dovish. We're expecting that to come from, be fed by the Fed chair, Jerome Powell. This data could turn things around. We get a slightly higher, and I think it could only be a 0.1%. If it comes in plus 0.3% on Friday, plus 0.4% month on month, that could well take those expectations all the way back down to 50 or less than 50%. And we should see some big moves in the market. So going to drop over to some charts now and see where we could see some substantial moves. And there's been some already. So bear with me a second and I'll jump over to our charts. So I've gone first, of course, to the world's favorite precious metal, and something we saw some decent moves out. Had been a quiet day on Friday, the Friday hangover from Thanksgiving Day. For most products, currencies were largely unchanged, stayed range bound, but we got some decent moves in gold. So as we know, gold's been trucking higher, 20% since that break higher in September. We've seen a bit of range bound, albeit large range. And then a breakout on Friday, as you can see here, was hovering underneath this resistance level. Wasn't a bad resistance level. Bang, we got that break up 1.76%. By the close on the day, low down around 41.56 and high up at 42.30. As you can see now, trading up at 42.41 seems to be taking a bid. We have seen some big players. We heard that Tether had been bought, building a lot, and a lot of sovereign players had also been piling into the gold market. Some consternation on Chinese data that came out. They were about 10th in the list, but there's some chatter in the market that they've done a lot more than has currently been declared. Certainly, we're seeing good buyers on dips, and it does seem that we're back into that stage that gold is moving, no matter what we're seeing in safe haven and no matter what we're seeing in dollar. But obviously, what we have seen from the dollar in the last week, along with those Fed rate cut expectations, is some strong selling. Seems to be moving forward with that at the moment, as you can see, gold moving higher. Now, by the time we get to Friday, we could, if we're still around these levels, expect support to be coming in near these break levels, around about that 41.56 level. The next topside move, as you can see here, we're challenging those highs that we got earlier in November. To be honest, it's back up to those all-time highs. If we see further dollar selling in the next couple of days, we could be challenging those levels again. Should be very interesting in gold. We're guaranteed to get moves, whatever happens, over those US jobs numbers and over that core PCE price index. Going to skip over to currencies now. We'll kick off with euro. So here's that euro daily chart. Now, this is an interesting one. We could see some good moves in euro, and we have done over it. We are still range bound, as you can see, topping out here around 116.65. It has been squeezing into this flag. If we're still around these levels, and we haven't seen massive moves in the euro, expect any stronger numbers to take us down, challenge this support level and these previous lows just under 115, the figure. Weaker numbers locking in that 25 basis point rate cut could take us higher. We'll see a break of this trend line. Then we're looking for a break of these highs, and it opens up the way back up to this longer term resistance, all the way up at 119. Probably first stop's going to be somewhere around about that 117.30 level, that high back on October 17th. Now we'll go to probably the busiest currency that we've seen for the last few weeks, certainly, and probably even across the course of 2025. Let's go and have a look at dollar yen. And here's the dollar yen chart. So good move. As we all know, dollar yen has plowed and driven higher since September, all the way up to these uncomfortable for Japanese authorities highs just south of 158. It has seen a decent move back. It hasn't been because of Japanese authorities. It's been because of the change in the dollar outlook. It has taken us down to here, but today's move did come on the back of more hawkish outlook in Japan, on the Bank of Japan. We've seen a decent move today. It broke through, and this is another break trade that we've seen early this week alongside that gold. Broke through that support level, and we've seen what we're looking at, a 0.41 decrease. High earlier today, 156.20. Seen a low at 155.37 already. It does open the way up for a move. Certainly first in line will be this low around about 153.60. Then from a technical perspective, it could take us all the way down to 151. The figure that would need weaker numbers out the US, I feel, and certainly locking in that rate cut from the Fed. So dollar yen, plenty of opportunity. Obviously, if we get stronger numbers out the US, we could see these previous highs challenged in short order as well. Last stop on the currency merry-go-round. Let's go and have a look at cable. And here's the cable daily chart as well. Similar pattern that we've got to euro, a little bit harder. As we know, cable does tend to go, when it moves hard. If we're sitting around these levels, lower numbers in the US should take us through this trend line resistance take us through the recent high up around 132.70. We'll attack that 200-day moving average around just above 133. Opens the way for a bigger move higher. Of course, stronger numbers, and I feel the risk is there, as I've said before. You can use this. Bears will certainly be using these levels to leverage against. Stronger numbers out the US this week could take back those rate cut expectations, take us back down into this range. Initial support going to be coming in around about 131. We've then got lows down here, 130.30, and then the November low down at 130.07. That 130 level, if we get anywhere near there, and I'm aware it's two and a quarter big figures away, it should be very interesting. So plenty of opportunities in the week ahead. As I said, key data coming up for me. Those ISM numbers probably won't have as much effect as the jobs numbers. ADP, weekly unemployment claims. Don't forget that's all we've got without the non-farm payrolls. But that inflation number on Friday, the core PCE, we get 0.1, 0.2 either side. Expect to see big moves in the dollar. Thanks for tuning in. Once again, if you need to get more from us, please subscribe to our channel. Have a great week, and anything you need from ATFX, please do let us know. Thank you.